Yes. Now, what are we talking about today? What are we talking about today? I said I'm going to be talking about, first of all, I'll be answering everyone's questions. Then secondly, I'm going to be talking about, okay, how to grow your accounts. And then thirdly, I'll be talking about difference between scalping, day trading, and then swing trading. So since nobody has any questions for now, because we've not started anything yet, I'll go to differences between day trading, scalping, and then swinging. Yeah, so as usual, we're not going to be doing much of analysis again. But we just need to deal with psychology here today. We just need to deal with psychology because most people believe that they can catch, maybe because they've watched a lot of YouTube videos, a lot of different things on YouTube. They believe it's a must that they catch 1:100 or 1:200 before they can be consistent in these markets. That's what most people believe, that it's until when they start catching 1:100 or 1:200 in these markets that they start achieving consistency. But let me just tell you something reasonable now. It's not about catching 100 pips. 10 lots on 10 pips is better than 0.2 lots on 100 pips. Be wise. 10 pips is changing lives. What's the meaning of what I just said? Remember, your psychology has to be changed. Most people feel, okay, it's until when they catch 100 pips, 200 pips, they can be profitable in these markets. No, it's not about catching 100 pips. It's not about catching the 200 pips. 10 lots on 10 pips is better than 0.2 lots on 100 pips. It's about the lot size. It's about the lot size, not about catching the pips. Because now let's talk about differences between day trading, scalping, and then swing trading. Now, a scalper. Who is a scalper? A scalper is someone that scalps in these markets, that takes a little profit in these markets. What do I mean by little profit? It means his tip is not always far from his entry, because he wants to scalp and then run out of the market. And then day trader is someone who trades for the whole day. That it doesn't close profits immediately, unlike the scalper, whereby a swing trader is the one that holds a trade for a very long time. While a swinger is the one that holds trade for a very, very long time. Now you can see the differences. Now you can see the difference between these three people. This is the scalper, this is a day trader, and then this is a swinger or position trader. Swing trader are the ones that always chase the highest risk to reward ratio, and then that's what everybody wants to become, a swing trader. Like, okay, you catch the highest risk to reward, right? Because that's what everybody wants to become. Like, hey, the risk to reward is always very, very nice, blah 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 blah. But let me tell you something. The people that suffer most in these markets are the swing traders, because they are the ones that go through the ups and downs in these markets. They'll see when the market is in profits, the old markets will touch them at break even, come down, take out them at break even, do a lot of things before markets hit their TP. But now let's look at the day trader. Day trader takes a little time, it goes down, it's take profits. But what about the scalper? The scalper doesn't waste time at all. Once the market moves, now market gives you 10 pips, you are out. Scalper, 10 pips is out, 10 pips is out. Now this one, let's say 50 pips, is catching 50 pips, and before market move to 50 pips, remember, market will move to 50 pips immediately. It won't run to 50 pips immediately. Okay, market will run to these 50 pips immediately, which is for the day trading. Same as the swing trading. It won't give you 100 pips on that single trade just in that day. No, you have to hold for days. So these people are the ones that face a lot in these markets, whereby the scalpers, instead of these ones waiting for one trade to ease their TP, these scalpers here, they've taken 5 trades that have hit their TP already. Now tell me why the scalpers won't be the richest. Tell me why the scalpers and day traders won't be the richest, because he's the first person that will eat TP. Scalper taking a trade, 10 pips is out. He has looked for that trade, 10 pips is out. He has looked for that trade, 10 pips is out. But the swinger is still here, just on one single trade. Now that single trade is what now? Is 100 pips, and markets won't do 100 pips sharp. You have to wait for days on just one trade. You maybe it's good 20 pips in profits. You lock profit at this point, and then you let runners run for sure. You surely let runners run, lock profit again, doing all sort of things. And at the end of the day, you might not even eat your take profits, because markets would have what? Eat your stop loss at break even. That one is certain, very very certain, very very certain. Markets will have eat your SL at break even, and then you are frustrated. Tell me why you'll be frustrated. Just tell me why you'll be frustrated. We are always chasing the biggest R to R, all in the name of catching the whole market move. Whereas you can just put all your lots here on this little trade, on this little move, and then you are out. Catch another one, little move, you are out. Day trading also very very nice. Wait for it to move a little bit, catch the move that it wants to give you, and then you are out. But this swing, you have to hold. The lot size a swinger will use is not the same thing. It's not the same lot size a scalper will use. A scalper will use bigger lots because he knows he's going to take TP ASAP. If a swinger, if a scalper uses 0. A network. If a scalper uses 10 lots here, it is very very certain that a swinger will not be able to use that 10 lots. Why? Because for swing trading, your SL has to be wide, sure, because you want to hold the trade for weeks, days. Then your SL will be wide. You'll be afraid of using big lot size. Then the fear comes in. But scalper, he knows what he's doing. His target is what? 1:1, 1:2. His SL is not far at all. He knows what he's doing. ASAP. He uses big lot size, enters the markets, and sharply he does his thing. He has taken his profit ASAP. But the swinger, you want to use 10 lots because you know that your stop loss is wide, and then using wide stop loss with big lot size is very very dangerous, because once it hits your SL, you are done for the week. You are done for the week already, because you are a swing trader. You are like, oh no. So this is what causes frustration in these markets. You have to fit to the style that makes sense most to me. And I'll say, as a Nigerian, everywhere is hard. Everybody knows everything is hard, and then you don't want to be waiting for 5 days for your trade to move, and then it will move without even going to where you want it to go. It will move and then stop you out at break even, give you funny things, and then you won't even get your goal. But as a scalper and as a day trader, man, you are flexible. You can do a lot. You can catch more than one trade, because as a swing trader, you want to focus on just one trade. Okay, if I can catch this one trade to swing it, then I know I'm good to go. But a scalper, it might catch just one pair and then catch 5 trades on it. That's it. It's done. Even if one hit SL, he knows that for sure the others will recover for him. But this one, if one hits SL like this, it's going back to the village. It's going to the village, because the SL is always going to be wide for sure. You can't compare a scalper and a swinger in these markets. Check anywhere, the richest traders, they are not swingers. So don't let any YouTube deceive you that 1:1000, 1:200. Don't let any YouTube deceive you. I repeat, if you want to actually gain consistency, now I'm moving to consistency now. If you actually want to gain consistency, don't rush for the 1 to 2000 risk to reward, 1 to 100 risk to reward that you've seen on YouTube, even though you are a smart money trader, because I know smart money is the one that has the highest risk to reward. If you know you want to achieve consistency fast, go low before going high. Not like, okay, you want to catch the whole market move, whereas you can just catch a little move to the next trade, catch a little move. From that perspective, you are building your consistency. You are building consistency. Consistency is not easy to build in this market. It's very very hard, because consistency is when you are doing the same thing over and over again, to gain consistency. It's very very hard to gain consistency in this market. Very very hard. You have to also follow your trading plan, follow your trading rules. You don't have to break your trading plan. You don't have to break your trading rules. Your trading plan now, okay, if you say your trading plan, you want to be trading just a particular type of entry, and then once you start hitting stop loss, it will frustrate you. You'll be like, oh, what do I do? You get confused. Should I trade? Should I change my plan? Should I do this? Should I do this? Sticking to your trading plan is very, very important. It's very, very important. That's the only way to what achieve consistency in this market. That's the only way to achieve consistency. Stick to your trading plan. Stick to your own trading rules. Then you achieve consistency faster. Don't let any YouTube deceive you and say 1 to 1,000, 1 to 200. Just follow what the market is giving you at the moment. Okay, you can see that, okay, I'm targeting 10 pips in this area, 20 pips in this area, 50 pips in this area, then you are done. Not looking for the crazy risk to reward, 1 to 100, 1 to 1,000, 1 to, you know, all those things are not, to me, they are not realistic. But if you can get it, then fine. But first, target the most realistic ones. Target the reasonable and realistic ones, not following the trend on YouTube that, hey, this is this, smart money is this, smart money is that. I'm not saying smart money can't give you that, but be realistic with yourself if you want to achieve consistency in this market. Be very, very realistic with yourself if you want to achieve consistency. So that's what I have for you on swinging, scalping, and day trading. You can never compare the levels. Check the richest guys on Instagram. They are not swing traders. They are what? Scalpers and day traders, not swing traders. This is because these swing traders, they are the ones that suffer most. They'll see the drawdown, see the back, it's SL at entry, it will move in their direction again, do this and that, you know. It's always frustrating, and that frustration will lead you to not achieving the consistency, because you won't gain anything. You'll be like, oh, what's going on? You'll just be confused. You'll be tired of the market. You'll be tired of everything that's happening around you, because it will keep going against, it will go against you. It will little bit hit your stop loss, do a lot of funny things before it starts going in your direction again. Okay, I have 6-7 people on this call. Yes, now for achieving consistency, I've answered that. Hey, please mute yourself. All right. Yes. So that's the difference between scalping, day trading, and what? Swing trading. Scalping, day trading, and swing trading. Choose your type of trader. Choose the type of trader you are. Is it the one that will hold and see all the markets troubles before eating take profits, or the ones that take profits fast and then move to another trade? Take profits fast and then move to another trade. Yes. The next thing I'm going to is how to grow your accounts consistently. Like I said, somebody has a question that how is the best way to grow a Forex account? First of all, you have to get a strategy you are using. Okay, what strategy am I using? There's no king of strategy in these markets. All strategy is kings. All strategy is king, rather. Depend on how you trade them and your psychology to the strategy. All strategy is king, depending on how you trade them and then your psychology behind the strategy. I have a guy that trades just Fibonacci alone, and then is doing fine, very, very fine. Support and resistance traders doing very, very fine. Retail traders doing very, very fine. But what happens? What's the problem? That okay, I can't achieve consistency. First thing is changing strategy. You are changing strategy from one, you are bouncing. This strategy, this, that. That's why and something I noticed is that using retail strategy will make you gain consistency late than when you are using the smart money strategy. That's why I like the smart money strategy. It makes you gain consistency faster than when you are using retail trading. That's what I observed. You gain consistency faster with smart money than retail trading. But now, okay, you started trading smart money. How can you achieve consistency? Because we are all smart money traders here. Now, too much of information or too much of knowledge can really affect your trading psychology also. There's trend line liquidity, there's the normal horizontal liquidity, then you are adding Fibonacci again, you are adding indicators, you are adding a lot. You are just adding a lot. I just feel smart money is also kind of hard because there's imbalance, there's inducement, fair value gap, the order block, the liquidity grab, Asian liquidity, Wyckoff itself. That's a lot of knowledge to acquire. But how do you filter the ones you need? How do you filter the knowledge you need? How do you filter? How you filter is you filter with the one it works fine with you. Okay, I have a lot of knowledge on smart money, fair value gap, inducement, Wyckoff, liquidity grab, blah 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 blah. I only use the one that I know that okay, this one is working for me and I've achieved consistency with it. Now, how do you achieve consistency? What works for you? Okay, this one works for me, other block works for me, and liquidity grab also works for me, then fine. Stick to it. Okay. Yes, other blocks work for you, liquidity grab also works for you, and then Asian session also works for you. Then what are you looking for again in this market? Stick to those three. And okay, Wyckoff works for me, so then stick to those four. Now, okay, then after I know these four, then I can move on. And you can start dropping your questions if you have any. Okay, I have 10 people on this call. You can start dropping your questions. Stick to one. Okay, stick to the one that you know very well. Like, okay, I have a very broad knowledge on this, and then it is working for me, so fine, so fine. Then stick to it instead of okay, you have a little knowledge on Wyckoff, then you've not started even trading with the Wyckoff, then you started jumping into Asian session again. Asian session liquidity. You are jumping from Asian session liquidity. You are jumping to how to use inducements, how to learn inducements. That's a lot for you to. Sorry about that. That's a lot for you to take in. And it's really, really affecting your psychology because now, once you see the chart, you are seeing a lot. You are seeing liquidity, you are seeing Wyckoff, you are seeing inducement, you are seeing the other block itself, you are seeing a lot. And you're like, oh man, what do I do? And then that's when you start seeing 3 other blocks again. You see another block here, you see another block here, you see another block here. And you're like, oh no, what do I do? That's the question. Okay. Start dropping your questions. I'll answer when I'm done. So the best way to achieve consistency is to stick to one which works for you. How did I achieve my own consistency? Me, for example, so I won't waste time. Now, I learned other block smart money concepts from someone in my country because most people ask me that do I use ICT? Did I learn from ICT, Phantom, whatever? Me, I just feel those YouTube guys are what do I say now? Overrated because I've taken a lot of courses and then they don't even make sense at all. So I prefer taking courses from someone in my country and I can look up to, because YouTube, there's a lot of lies on YouTube, there's a lot of lies on Instagram. So I just want I want to go straight to the point. I don't want to waste my time at all because there's a lot. This country is hard and then there's no time to play. There's no time to play at all. So when I started learning the smart money concept, okay, I saw that okay, other block makes sense and Wyckoff makes sense. Yes, other block makes sense, Wyckoff makes sense. Then I started trading other block plus Wyckoff. Then I noticed when I started doing my own research, I was like, hey, this market makes sense than just trading other block and Wyckoff. It's like this market makes sense. Go. Let me delete what I have there. Then Euro CHF. Now, I now started, when I knew about liquidity, I was like, wow, so this is what these banks do. This is what these banks do, stuff like that. Then I started looking out for what we call the Asian liquidity. Then I also learned about that. I didn't really get much information about it, but I knew that market always takes out the highs and lows of the Asian liquidity. Then once I knew about that, I was like, okay, how does market take out the Asian highs and lows? Nobody taught me this. It was just due to my own back tests. I was like, if other blocks takes out liquidity and Asian session gives us liquidity, what does that mean? It's just common sense. Okay, Asian session forms liquidity and then the London session takes out the highs and the lows of the liquidity. Then, and I learned that other blocks also, banks use other blocks to clear liquidity. It means now I was trying to rephrase everything. I was like, okay, if Asian session forms liquidity, I know that the order block above or below the Asian session is going to take out the liquidity with the London session. And then I started backtesting. You can see how I was making things up by myself, and then I was able to give you nice content on that ebook that I wrote, that you guys were like, wow, it makes sense, it makes sense. That was, nobody taught me, honestly, nobody taught me. It was just my normal reasoning. Okay, liquidity, where is liquidity formed? Asian session, and then normal type of liquidity, and then nice. Then I started forming everything by myself. I was like, wow, this makes sense, this totally makes sense. And then you can see how we always kill it when we want to grab liquidity. Very nice. For the Asian session, you can see that that's where I spotted the rectangular zones. So from there, and I was like, okay, achieving consistency is where we are. And I was like, wow, if this works, then let me stick to it. Now I already have 3 trading plans. I know that, okay, once I enter the order block, I use Wyckoff, and once I enter the market and I spot Asian liquidity, I set my pending orders above or below the liquidity depending on where my order block is. And I explained to my students how to grab liquidity reasonably using the Asian session, which was yesterday, the live class I held yesterday with them. How to know the first direction, for the Asian session liquidity. So you don't have to wait for me every day for signals. Once you can see it by yourself on your own favorite pair, because these are my own favorite pairs, and then my students might not be trading these. So anytime you see this type of things happening, you should know that this is what the market is about to do, and then when to trade them, the time to trade it. I gave them everything yesterday. So everything is just your psychology. That's the way to achieve consistency, doing the same thing over and over again. Using Wyckoff, I use Wyckoff. Once I spot Wyckoff, I know that, okay, this is Wyckoff, blah blah. I'm waiting for the UTAD, I'm waiting for the spring. Then after everything, I'll set my entries. So easy, so easy, as simple as ABC. And then from there, you can grow your accounts. You can grow your small Forex accounts. Oh, who else can't hear what I'm saying? Who else can't hear what I'm saying? I believe my mic is on because my volume, what's this stuff now is moving, so I know I'm talking. Who else can't hear me? If you can hear me and see my screen, please type you can or yes or something. Just let me know. I'm still waiting for you. I'm still waiting for responses. If you can hear me and see my screen, type yes, or just let me know that you are following. All right, somebody said yes. So Mr. Abbas or Mrs. Abbas Adebayo, maybe you should log out. Maybe you should leave the meeting and then join again. Just try to leave the meeting and join again so you can hear me clearly. Now, somebody said, does order block really work on synthetic indices? Yes, it works. It works on synthetic indices. It works a lot. But I've not used Wyckoff for synthetic indices. Wyckoff, I've not really seen Wyckoff accumulation or distribution for synthetic indices. So, but order blocks works. Order blocks work a lot on synthetic indices. Now, how to grow your Forex accounts? That's the third question I got today. And then I'll do a little what's the time? This is 9:29. Okay, I'll just run little analysis and then we're done for the day already. This is just about changing your psychology towards trading. That's all. Once your psychology is okay, then you get consistency. Not like, okay, you watch the YouTube video now and then person is saying okay, inducement. Now inducement is also part of order blocks, which I don't really use, and I'm consistent. So in this market, you don't need everything. You don't need everything to get consistency. You don't need everything at all. Just pick one or two that works for you. What might work for me might not work for you. Just pick one or two that you know it's working for you. Then you see how you achieve consistency in these markets. Okay, you know that other blocks work for you, use it. Wyckoff works for you, use it. Not going to YouTube again and then watching another video, checking inducements. There's some people always say IMR, imbalance. I also use imbalance too sometimes, but not really. Imbalance, fair value gap, you know, different sort of, you know, there's a lot on why, and there's a lot on smart money concepts. There's really a lot, so you don't need to know everything to achieve consistency in these markets. Trust me, you don't need the whole knowledge, because too much of information can be harmful. Because when you are seeing the chart, you are seeing imbalance, you are seeing inducements, you are seeing everything on just that single chart, and then you don't even know when and how to execute a trade, because there's a lot of information. You are like, okay, if maybe there's a lot jam packed somewhere, and then you are seeing liquidity grab, you are seeing liquidity, you are seeing inducement at the top, you are seeing Wyckoff again, then you don't even know what to do at that point. Then you are stuck that, oh, should I enter here, should I enter here? You are confused. So achieving consistency is just doing just one thing over and over again, over and over again, over and over again, over and over again, and then you see how your account is going to grow. Now, growing a particular account, growing a Forex account, first of all, in this market, know that 0.01 cannot do you much. Just accept that ASAP. 0.01 can't do you much in these markets at all. Whether you are a scalper, a day trader, or swing trader, only if you are trading volatility, whereby the 0.01 is very, very heavy. But for currency, just know that 0.01 can't do you much at all. So if you want to start trading normally, I always advise you use capital that you can start with 0.05 or 0.10 standard lots. Then you know you are ready for these markets. But 0.01, now I'll tell you why now. Now, when you are trying to grow your Forex account, let's say you have a 200 USD account. Now you have a $200 account that you want to grow. Now you can use 0. There was a video I dropped for my student on risk management. If you watch that video and then you are simply in account, it means you are not a student who listen. You are not a student who listen at all. If you can watch my risk management video and then you are still blowing accounts, sorry for you. You are not a student who listen. Now you have okay, let's use 10 pips. You have a $200 account and you are using 10 pips SL. Now tell me why you will be using one lot size. Tell me why you'll be using one lot. That's over leveraging, right? That's over leveraging. Tell me why you should be using one lot size on a $200 account and then you want to grow the account. It's not possible, because you are over leveraging the account, and any small drawdown you are out. Any small drawdown you are out. Now $200 account, you are using 0.5, 0.1, and then 0.1, 0.2, you are still fine. Then 10 pips SL. If you are using 10 pips SL, the SL, it means you are losing what? $10 per trade. $10 per trade. Now you know that, okay, your TP is not much. Just want to 30 pips, you are out. 40 pips, you are done. Or if you can see the good movements, you are done. Now you are using 0.1. What happens when the market triggers your pending order? Once market has done a little movement, let's say 15 pips, what will you do? You close what? You close half of your position. Am I right? You close half of your position. You what? You let runners run. Your stop loss will be what? Your stop loss will be here at entry. Then you leave the remaining what? 0.05. Once the other 0.05 is about to hit TP, you what? You close it again. Let runners run. You what? You change your SL to this place, right? And then you leave the remaining position, whether it will hit the SL at break even or it will hit the take profits. Now that's with what? 0.10. From 0.10 you've reduced everything back to what? 0.01. Now if you are using 0.01 initially, tell me how you would let runners run on a particular trade. I need to know. Tell me how you would let runners run. Because if you are using 0.01 for example, and then market moves 15 pips, okay, there's no way to close the position. There's no way to you only want to lock profits. And then if you lock profits using 0.01 and then the market hits your lock profits, hits your SL as break even, you know, that's like a very, very small amount of pips. Very, very small amount. Unlike someone that's using one here and has closed half of the position, and then even if he hits SL as break even, you know that he has banked something. Now the account is growing, right? The account has grown to a particular level. But someone using 0.1 now, and then he locks profits because he wants to hit TP, because you are using 0.0, you are using 0.01, and then you want to hit TP by fire by force. You surely want to lock profit also, because you don't want the market to go against you again since it has moved in profits. And then what it enters your profits and then it eats you out as break even 0.01. Then frustration comes in. Like, man, what do I do? You can see now someone using 0.1 has grown an account, has grown the account reasonably to a particular level, unlike someone who is using 0.01. It's still at what the account is still where it is. The account will still be where it is. Now, to grow a $200 account or to grow a big account, you're surely going to be using what? Big lot size, which will allow you to what? Lock profits, let runners run, do a lot. You know, you are going to do a lot with the lot size. That's why sometimes when I use big lots, I always like it. It even makes sense. You know, you just close, you keep closing till you are tired. That makes sense. Or open like 5 positions and then let them run and keep closing once market is moving to certain levels. Keep closing, and then you also locking profits. Then at that point, you know that yes, I'm growing these accounts. That's the best way to grow an account, using trading stop losses and then using good lot size that will move the account. Once the account has gotten to a certain level, let's say your account is on 200 USD and then it's now on 230 USD. You understand? It's already on 230 USD, and you're like, wow, this account has grown by 30 USD. Then you can close half of the position. You know, you've banked something. Like, okay, yes, I've banked something. You've closed half of the position. You've banked half. Then lock profit. So whatever the market is going to do at that time is no longer your concern, because you've banked something and then you've locked the profit. So on no reason will you make loss on that trade again. Now, if you want to trade the next trade, let's say unfortunately you close the account on 220 USD, then your next risk should be on that 20 USD on top of the accounts, because you are risking the profit now, not the capital. You understand what I'm talking about? So that's how to grow an account. Not like you just be trading, not taking calculated risk. You are just trading anyhow. The next trade will be on what? The $20 that you've made. Okay, the next trade should be on the profits on the account, not the capital again. You understand? So even if you are going to lose the money, you know that okay, you are going to be losing the profits, and then the next trade you take, you'll be trading it based on risk management. So then it means you are risking the next $20 per trade. And luckily for you, if you are not the type of person that risks $20 per trade, it means that you still have enough profit at the back after making a loss on that trade. You understand? Let's say you are the type of person that risks $10 per trade and then you've made $20 on your $200 account. It means you are risking just $10 again, and then once you lose, it means your account is going to 210. You've not lost out of the capital, you are still losing out of the profits. That's the reasonable way to grow an account. Not like when you grow an account up to, let's say, 250 USD, then you increase your lot size. No, don't increase your lot size. Lot size increasing is after you've mastered the crafts, and then you're like, yes, then you can deposit to a separate account. That's what I always do. I deposit to a separate account, and then I'll now risk bigger lot size on that account, not on my main account. You understand? There are different accounts I have. I have normal accounts. I have my big account. I call that the investment account. I have my account for the other strategy I'm learning from Raja Banks, which I'll be teaching my students by next year. I have an account for that. I have accounts for big lots. Yes, I have accounts for daily bread. I have different accounts. You know, my broker accepts you to open various types. You can open 10 accounts with my broker. So I have a lot of accounts. Then you can do that. You can have a main account that, okay, this account, I want to use this account to master the strategy and then achieve consistency. If I can grow these accounts, then I'll deposit to another account where I'll be using bigger lot size. At that point, you're already a reasonable trader. You know what you are doing in these markets. Not like someone who is trading, okay, you are trading 200 USD now, and then it has grown to 250. Then the next thing is that, okay, because you can see that I've grown this account to 250, then you become overconfident, and then even without seeing confirmation on trade, you just say, hey, this is a support area here, let me just risk the $50 on my account to buy, to just enter a buy here, so I'll not enter a sell at this other block. No, follow your trading plan. That trading plan that allowed you to grow the account to $250 is still that trading plan that will take you to grow the account to $1,000 account. Breaking your trading plan is very, very dangerous. Sometimes it might work. You can say, okay, since I know that the markets, people are very, very funny. Okay, other block is here and the market will buy to this point. Why not just buy because there's a support here, and then I'll risk the $50 on my account since I've grown the account to 250, and then I'll be risking the $50. What if it doesn't buy? What if it sells? And then you raise the $50 and then you are back to square one, and you're like, oh, okay, somebody joined, and you're back to square one, and you're like, I shouldn't have done that. Is not doing is better. It's safer than sorry, because you might not know. Everybody in this market, we are just trying our best to get the best entry price, to get the best strategy. Some people always say beat CMM, beat the market makers. Everybody wants to beat the market maker, but it's not possible. It's not possible. The only edge we have in these markets is your trading plan and your trading psychology. See, if I'm using retail trading, is my trading plan that will make me different from a normal retail trade that is just trading support and resistance, breakout and retest, Fibonacci, trend line, everything, indicators. Is my trading plan that will give me that edge over everybody in these markets. That way, I will achieve consistency. Unlike someone that is just trading. Okay, now you've grown your account to $250 account to $250 now, and you want to take a sell here, and market will surely buy to this point. Why not wait for the market to buy, then take your sell, instead of using that $50 you've gained to take a buy? And then when you lose it, you'll be like, I should have done that too. You now start forcing analysis, justifying your reason for having a loss, and it's not part of your trading plan. So that's not really nice. You have to stick to your trading plan. You have to stick to it. It's very, very hard. I won't lie. It's not easy to stick to your trading plan. It's not easy at all. But you just have to stick to it, because that's the only edge you have over the market makers. There is no strategy that will say beat the market makers. And it got to a point I was like, is it actually true that the market makers use other blocks? Because I just feel the strategy out there. What I just feel is that, okay, these strategies is just what people feel, just what people form over time. And then once you can achieve consistency with the strategy, then you are good to go. You are very, very good to go. I noticed that when I started learning from Mr. Raja, to me, that's the best trader in the whole world. To me, Raja Banks. So these markets is not about having the best strategy. There's no best strategy. It is you yourself like this. You are the enemy of yourself in these markets. Because once you start growing your account to a certain stage, you just feel like entering trades. I know what I'm talking about. You just feel like entering trades that, let me just risk small. Since I've made profits, let me risk the profits. Why not risk the profits according to how you've entered your trading, according to how you've planned your trades, how you've done your trading plan? So I don't have much to say these nights. But the little I have to say, I hope you guys will implement it. I just hope you guys will implement it. Yeah, okay. I'm getting started with this big topic. All right. Is it the other block candle that should break structure, or the next candle after it? Wow. Is it the OB candle that should break the structure, or the next candle after it? No, not the OB candle. The other block candle is the candle that forms before the break of structure. The break of structure is just the normal breakouts of a previous higher low. This is, yes, higher low, previous higher low, then this is the other block. So the other block is not the candle that broke the higher low, as you can see here. This is a break of structure here. Nice. BOS here. Nice BOS. Then the other block before the whole move to break the structure is the green candle before the whole move, before the whole bearish move to break structure is the other block, not the candle that broke the structure. The candle that broke the structure is part of the whole sell candles that are moving to break the structure. But the candle before the green bullish candle before the whole massive sell is the other block candle. That's your other block, not the candle that broke the structure. Any candle that can break the structure, but the other block before the whole move to break structure is the other block. The green candle that formed before the whole move to break structure is the other block. I saw another question concerning $50 or so. Network. What's going on? All right. Is there hope for $20 to $50 deposit trader? Yes, there is hope. Like I said, this market is just you and your psychology. Just you and your psychology. If you believe you are going to grow this $50 account, then first of all, stick to your trading plan. It's not like you go and watch a YouTube video today and tomorrow you're watching another YouTube video. Next tomorrow you're watching another YouTube video, and then you keep watching YouTube videos that you've not even practiced the whole ideology behind everything. You know, you won't grow the accounts because there's a lot on your head. But just stick to a particular trading plan. It's very, very possible. It's very, very possible. Someone grew, one of my students, was it not last year? It was $10 or so. $10 to around 150 USD. So anything is possible in these markets. There is hope. It depends on you. Just stick to your trading plan. Have a working strategy. Then you see how you flip the accounts massively. There is hope. Any other question? My expectations for AUD card. What's wrong with this network now? This network is good. It's time for me now. It's telling me 3G. Any other questions? So I think I've explained how to grow your accounts. It's not about looking for the holy grail strategy. There is none. Now, okay, I've talked about $200 accounts. How can you grow a $10 account? Once your account is getting to new levels where it has not reached, let's say you've grown, you are trading, and then the $10 turned to $15, just close ASAP, because that's a new all-time high per se. Let me just use that word, all-time high. That, okay, your account has not gotten to $15 before, and then you deposited 10 and it has gone to $15. Just close. Somebody will be asking that, what if it will reach $15 and $20 on that particular trade? Just close. You understand? Then as a trader, you must break the previous high to give you a new high. You understand? So it is possible that in the process of breaking the new high, which is breaking the $15, there might be drawdown, which will be the higher low, to give you a higher high. So a drawdown should not actually be a way to give up, like, per se. As a forex trader, the way your life is the way the chart is. Everything about you is just the way the chart is. Okay, you deposited $10 now. Okay, as a forex trader, your life should actually be going up, not down. Now, you deposited $10, you grew it to $15. This is $15. That's the all-time high. I believe everybody knows about all-time high, ATH. Now you've gotten to the all-time high, and then you've closed, and then the next trade you might get a a drawdown, maybe to $15 to $13. Now, the drawdown does not mean you should what, give up. It might just be what, a higher low to bounce back to give you a new high. You understand? To give you a new high. And then from there, you might go down again. You've gotten to $20 at this point. Okay, nice. Then you can go down back to what? To the $13 you were coming from. And then frustration of setting for sure. But just stick to your trading plan. And then what? You get up again, a little high. Support is created. Then, okay, at this point, you're already getting used to what? Your account is getting stagnant. Like, oh no, my account has not broken $18. Once it gets to a new high, maybe $25, close the account. That's a new high again. Once your account gets to a new high, make sure you close on each new highs your account gets to. Then you might probably get a drawdown on a next trade. It happens, it's normal. And sometimes you can just keep going up, and like that, the drawdown will be much again till you've achieved your consistency. Sometimes it might come down a little bit. Maybe sometimes when you withdraw, yes, it happens to me. When I withdraw, and then the next trade I take like this, it will just be a loss. It does not mean anything. You still bounce back again. So like that, you can see your life is also like the Forex charts. Up, down, up, down, up, down, down, up. And it's actually fun, you know. It's actually fun to see yourself grow. You're like, wow, I was not like this last year. I was not like this 2 years ago. I was not like this 3 years ago. It actually makes sense, seriously, to see yourself grow. Very, very reasonable. So please, any question, guys? Oh, okay, this is the video for yesterday. Session 2, 54 minutes. Visibility unlisted ASAP. 54 minutes. Any question? So there is hope. Now, it's not like you deposit $25 and be trading 0.5 or 0.1. You know, you have to start small. That's why I said 0.1, 0.01 might not take you far. But if you are consistent, you start building. That confidence will be high a little bit, and then you are very sure of what you are doing, because you are doing the same thing over again, and over again. So you are already familiar with everything. Even when there's going to be a loss, you know that, no, this trade will be a loss, I'm very sure, and to end up in loss, because you're already ready. You already know the type of movements the market gives when you are about to go in profit and when you're about to go in loss. You already know. So I think I've talked too much. 47 minutes. Okay, any question, please? Any question? I'm on 34% here. Any question, please? Any question? I think this one has uploaded. Okay, this one has uploaded. This one is for my students. All right, saved already. No need to download, promote, so I can promote on YouTube. Wow, that's nice. Still waiting. Any question, please? If you don't have any question, type no. Let me quickly run a little bit of what do we have here. So that will be my free setup for tomorrow. I won't send free setup tomorrow. So this will be the free setup for the group. For the free group, let me check. Euro AUD. Okay, now let's go to GBP AUD. What do we have here? Yikes, look at this crazy setup yesterday. I was talking to my student about this setup yesterday, and I used 15 minutes time frame, and then I was talking about the Asian liquidity, and this was the first entry we found, but I went down to the 5 minutes and it didn't trigger. Or more. Crazy stuff. So I went down to the 5 minutes. The entry didn't enter at all. Look at how it's moving up. This whole scenario here that's gotten there. 15 minutes time frame. I just hope I'll get Asian liquidity by tomorrow. I'll take a sell here. So this is where I refine my stuffs. I'm going out to the 5-minute time frame now. That's where I'll be stopping. That's where I get my sniper entries. That's how I get sniper entries. Going down to the lowest time frame to refine everything. And if it keeps breaking up, then no wala. We look for buy entries. But for now, market's still at our other block zone, and then this is midnight already. This is 9:55 p.m. Oh yeah. Okay. Yup. So this is the 5 minutes entry. Nothing much. Hasn't gotten there. Almost there. This is not even the free setup I want to give you. Let's go to AUD You can see the realistic TP. If I were to set it here, so you can see. So I just set it above the eyes of the Asian session, and then realistic TP. I don't have time to be chasing 1 to 1000 R to R. Look at this. So this is AUD. Possible scenarios can happen that, okay, this is higher low is here, support is formed here, and we can get something like this, because we'll soon get into the Asian range. And then if the Asian starts ranging like this, just set your pending order on this zone, exactly on this zone to be here. There's a other block on 5 minutes time frame which I've redefined. So this is the free setup I have for you. Yes, that's the free setup I have for you guys. Once you can spot Asian range at this point tomorrow morning, maybe somewhere here, something like this, and market is coming down, just set your pending order at this point ASAP, no time, then to take out the lows here, and then your TP will be above the eye, okay, to give us a new eye here. Realistic TP done, 42 pips, you are out. But if the market keeps coming down, and if the market doesn't range, then you look for normal entry. But if the market ranges, then it means that's created liquidity. That's why we'll be setting immediate pending orders. But if the market doesn't range and then enters the zone, then you have to look for the normal 5 minutes entry or wyke off entry. And if it keeps coming down, we'll take it here. So I'm expecting this tomorrow morning or more. This one looks sweet though. Chai. Makes sense. I'm just looking at this Gbp Aud since morning, like, oh god, crazy stuff. So we're expecting it to happen yet soon. I deleted Gbp Aud from my watch list before, but I'm back with it again. So any questions, guys? Euro USD has just been tanking since last week. I forgot all the questions I had. Send a DM. Okay. After spotting other block on higher time frame, when I drop down to the lower time frame like 5 minutes, okay, should I also look for an other block before entering? I should follow other block on our bigger time frame? Please, I'm a beginner. All right. Now, here is where the confusion starts. For me, what I do, once I spot another block on the higher time frame, I use 4 hours, 1 hour, and then 30 minutes to spot the other block. 4 hour, 1 hour, and then 30 minutes to spot the other block. Then once the market gets to that other block, I'll then switch to the 5 minutes time frame to look for entries. But once you want to enter for liquidity or Asian session, the way I explained this AUD now, that's what I'm waiting for my chart to load. Now you can see this is another block on the 1 hour time frame, nicely, as you can see here, like this. you can see that's an order block on the 1 hour time frame. But if the liquidity is going to form at this top, on top of this order block, then we should go down to the 5 minutes time frame. That's the way I do my things. Then I'll look for another block on the 5 minutes time frame that will take out the liquidity. Why? Because if I use this order block on the 1 hour, the SL will be too wide to grab liquidity. So I'll just go down to the 5 minute time frame to look for order block that can grab liquidity for me, which will be here. You can see that order block. Then there's a break of structure here to the upside. Then I'll be setting my pending orders here. Then liquidity is formed, then my pending orders will be here. But if liquidity doesn't form, then definitely it's still almost at the zone. You can see still at the zone. Then I'll just look for entry here. I'll now go back to the 5 minutes time frame again. ASAP. Network, what's wrong with you? Yes, then I'll go back to the 5 minutes time frame again. I'll wait for the markets to give me entry, any type of entry, before I buy. If this one doesn't create liquidity, if there's no liquidity here, but if liquidity is formed, since there's liquidity, I know markets wants to grab liquidity, so I set immediate pending orders. But if liquidity is not formed, I wait for confirmation on the zone in case it wants to go down. So I have to look for confirmation again. I believe I've answered your question. So you can use order block on any time frame. If you are entering for liquidity, you set immediate pending orders. But if you are entering for confirmation, you use the 5 minute time frame to confirm. Any other questions, guys? Any other question? You get the recording by tomorrow. Tomorrow again. Tomorrow I'm traveling tomorrow. You get the recording, but it will be on the YouTube channel. We have 56 minutes again. Please, any other question? If you have no question, let me know. Press no. Okay. If you have no question, type no. If you have no question, type no, so I can end this meeting. Okay. I'm waiting for your response. In the absence of no question, I'm gonna say peace, guys. I'm out. Who's that?